Hi everyone! Welcome to our 5-year business planning and financial projection walkthrough. We've built this model to be a comprehensive rolling forecast that covers everything from revenue segments to scenario testing and KPI dashboards. Before we dive in, just a quick tip on the color coding. Keep an eye out for blue text. Those are our hard-coded inputs where you can customize the model. Everything else, like the black and green text, is formula-driven or linked, so they'll update automatically. Think of the navigation menu here as our roadmap for today's presentation. Let's start at the engine room, our assumptions and master control panel. This is where the magic happens. We're looking at a 5-year projection for Excel quirks, starting with a base year of 2024. You'll see we've laid out our growth expectations, starting strong at 25% and gradually stabilizing as the business matures. We've also plugged in key margin targets, like a 70% gross margin, and detailed our working capital needs. Setting these levers correctly now ensures that the rest of our financial statements reflect a realistic and strategic path forward. Moving on to the revenue forecast, you can see how our income is built up across 4 main segments. Subscription and SaaS revenue is really the backbone here, consistently making up about 60% of our total mix. By 2029, we're aiming for a total revenue of over $11 million, which represents a solid 16.2% compounded annual growth rate. The chart at the bottom gives you a visual of that steady climb, showing a healthy, predictable expansion of our market footprint over the next 5 years. Now, let's see how that top-line growth translates into profit on the income statement. What's really encouraging here is the consistency. While we're scaling our sales and R&D spending to fuel growth, our EBITDA margin holds steady at 30%. By the time we reach 2029, we're looking at a net income of nearly $2.2 million. This tells us that the business model isn't just growing for the sake of it. It's maintaining efficiency and profitability even as the scale increases. Profit is great, but cash is king, right? Our cash flow statement shows the actual movement of money. Even after accounting for maintenance and growth-related CapEx, which we've been diligent about funding, our net cash position is incredibly strong. We start the projection with $500,000 and, through consistent operating performance, we're projected to close out 2029 with over $6 million in the bank. This gives us a lot of flexibility for future reinvestment or even shareholder returns. Taking a look at the balance sheet, you'll see a very healthy financial structure. Our asset base is growing, primarily driven by that accumulating cash balance we just talked about. On the liabilities side, we're keeping things very clean with zero long-term debt in this projection. The equity plug you see there is just the model's way of showing the balancing adjustment, but overall, it reflects a company that is becoming more valuable and asset-heavy as retained earnings pile up year over year. For those of you who prefer the high-level view, here's our executive KPI dashboard. It distills everything we've discussed into the big numbers. Over the 5-year period, we're looking at total cumulative revenue of $44 million. The steady 70% gross margin and 30% EBITDA margin are our North Stars here. It's a snapshot of a business that is scaling efficiently, staying profitable, and generating significant free cash flow, exactly what investors like to see. Of course, we know the real world doesn't always go exactly to plan, so we've run a scenario analysis. We compared our base case against a high-growth bull scenario and a more conservative bear scenario. In the bull case, where growth stays high, we could see revenues topping $15 million. Conversely, the bear case shows us what happens if growth stalls. We still remain profitable, but at a much more modest level. This helps us understand our margin of safety and plan for different market conditions. Finally, we have our sensitivity analysis, which is basically a stress test for our 2 biggest value drivers, growth and margins. These heat maps show us how sensitive our 2029 revenue and EBITDA are to changes in assumptions. For example, if we can push our growth rate a bit higher, you can see exactly how many millions that adds to the bottom line. It's a great tool for identifying which parts of the business we need to focus on most to maximize our terminal value. And that wraps up our model walkthrough. Thanks for sticking with me.